Very easy, simple strategy that anybody can do no matter the skill level. It's known as the 15-minute opening range breakout strategy, and it consists of 3 parts. The first part is the 15-minute opening range. So you're going to wait the first 15 minutes of New York session, then map out the high and low of that range. That's the 15-minute opening range. And the second part of it is the breakout. You're going to wait for a break outside the range, either a breakout above the range or below the range, meaning you're going to wait for a candle close outside the range on the 5-minute time frame. That's going to give you confirmation of where the market is most likely to go. Then the third part is the retest. You're waiting for a retest of the range or the 9 EMA. That's going to be your entry. Okay, so let's get on the chart and see how this works. Right here, we're on the 5-minute time frame, meaning each one of these candles represents 5 minutes of time. So we're going to wait for those first 3 5-minute candles to form in New York session, and then map out that range. Okay, let's see what happens. First 3 candles here. These first 3 5-minute candles are 15-minute opening range. So we're going to map out the high of those candles and the low of those candles, giving us this 15-minute opening range. That's the first part. Now the second part is the breakout. We're going to wait for a break outside the range for confirmation. Let's see what happens. Remember, inside this range is a no trade zone. We're waiting for a break outside the range. Candle close outside the range here. That's the breakout. That's confirmation that this market will continue to go down. Now that we got the breakout, we got to wait for the third part, which is the retest of this range or the 9 EMA. This yellow line here is the 9 EMA. So we're going to wait for the retest of that range. Let's see what happens. There's the retest. We got the retest of the range, and that's where we would enter our position to go short, meaning we'll make money if this stock goes down. We're going to put our stop loss above the 9 and the 21 EMA. This yellow line here is the 9 EMA. This green line here is the 21 EMA. So we're placing our stops right above there. And we're aiming for a 1-to-2 risk to reward ratio on this trade. Now let's see what happens. TP hit. That's a 2-to-1 on this trade. Just using the 15-minute opening range breakout strategy. Very simple. 3 components: the 15-minute opening range, the breakout, and the retest. Now let's go to a different day and do another example. Here's another day. We're right here on the 5-minute time frame once again. So we're going to wait that first 15 minutes and then map out the range. Wait for the first 3 5-minute candles. There's the first 3 5-minute candles of New York session. We're mapping out the high and low, giving us this 15-minute opening range. Now we wait for the candle close outside the range, which we did get on the next candle, a candle close above the range. That's the breakout. That's the second part. Now after the breakout, the third part is the retest. We're waiting for the retest of this range or the 9 EMA. Now let's see what happens. We get the retest of the range here. On the next candle, we get the retest. That's our entry to go long, meaning we'll make money if the stock goes up. We place our stops below the 9 and the 21 EMA. Remember, this yellow line is the 9 EMA, this green line is the 21. We place our stops right below, and we're aiming for at least a 1 to 2 risk to reward on this trade. Now let's see what happens. And TP hit. So that's a 1 to 2 on this trade using this 15-minute opening range. It is a very effective strategy, has about an 80% win rate, and it's very simple. Only 3 parts, and that's it. Anybody can do this to make some extra money or potentially replace your 9-to-5 job. So if you guys want to learn more about this strategy and more about other concepts and strategies that are easy to understand in trading, then follow, like, subscribe, and share the video.